While the consensus is for a 6.5% GDP rebound over the last 12 months, Fed members are expecting an even more impressive increase. Hello everyone and welcome to our financial markets review. Earnings releases intensified last week. In the US, more than 85% of the 123 S&P 500 companies that reported Q1 earnings did better than expected. Expectations were even raised, and the first quarter could be up by more than 33% year-on-year. This is a good indicator of the health of the US economy. The signs of growth are clearly not weakening since the economic activity figures for April exceeded expectations. The European Union has not been left behind this time, with April services activity expanding for the first time in 8 months. However, Lagarde's speech last Thursday tended to raise a flag for caution. Another reason to be cautious is the likely increase in capital gains tax in the US. However, the impact should be limited as it would only apply to households earning more than $1 million per year. In the meantime, the market remained very optimistic, and this week could witness the indices rise even higher thanks to the releases of tech giants Apple, Amazon, Microsoft, Tesla, and Facebook. In addition to the earning releases, the week will be busy with economic data. In particular, the first quarter's GDP is expected to rebound strongly in the US. While the consensus is for a 6.5% jump over the last 12 months, Fed members are expecting an even more impressive increase. This is another reason for the Federal Reserve to intervene sooner than expected on the current accommodative policy, especially as the employment situation seems to be improving. A first change in stance from Powell is perhaps to be expected at this week's meeting, which could be confirmed by the slowdown in bond purchases at the next meeting in June. The Bank of Canada has also taken a first step towards monetary tightening on similar economic growth expectations. This move has not affected Canadian equity markets. On the contrary, rates are easing as if investors had already come to terms with the situation. Stay tuned for our next roundup. Until then, have a nice week ahead.